Well, everyone, welcome to the next semester. And here in ITA311, we're going to talk first about something called G.S.T, called Goods and Services Tax, and H.S.T, Harmonized Sales Tax. Now, you'll notice that when we did B3s last semester, we collected G.S.T, which was 5% of the value of the good. This particular lesson is about how G.S.T, which is a part of H.S.T, works in Canada. It's quite eye-opening to a lot of people because this is called this particular type of tax is called a VAT, a value-added tax, and we'll actually go through a month's transactions to show you how this works. Now, Goods and Services Tax is a value-added tax. It's been around for quite a while, since 1991, and it was very controversial. When this tax was brought in, this particular leader, his name is Brian Mulroney, who was our Prime Minister at the time, the next election, he suffered a huge defeat. His whole governing party suffered a huge defeat, mainly because of this tax. Before, when you purchase something at the store, and you go and you'd buy, a package of toothpaste, and the toothpaste was $1, you would pay one tax. You would pay something called a provincial sales tax. But after G.S.T came into effect, you paid two taxes. You paid Goods and Services Tax, G.S.T, and you paid provincial sales tax. You paid two taxes. So Canadians were quite upset over this particular turn of events. So G.S.T, Goods and Services Tax, is a 5% charge on the sale of all goods, services, okay? And there are some exceptions, such as groceries, your rent, medical services, you don't have to pay G.S.T on. And the tax is levied at each sale, okay? And what that means is, when something's imported, you get we charge G.S.T of 5% on the importation. When that importation gets sold, the seller has to charge 5% G.S.T on that sale. The person that the importer has sold the goods to in Canada, when he sells those goods, he has to levy 5% on the sale. So every single transaction along the process of the economic chain is levied 5% goods and services tax. Now, some groups and organizations do not have to pay G.S.T. For example, charities and Indigenous peoples. And this become more apparent when we start talking about exemption codes. Indigenous peoples will become more apparent when we start talking about importation of tobacco in ITA311. But we'll go back to that later. So, in 1997, the provinces of Nova Scotia, New Brunswick, and Labrador merge their respective sales taxes into one tax, H.S.T. So it includes a 5% G.S.T and an 8% provincial sales tax called H.S.T. So H.S.T is 13%, and it is 5% G.S.T and 8% P.S.T. Okay, and this H.S.T is administered by the federal government. So in Ottawa, Justin Trudeau's government administers H.S.T. So in Ontario and British Columbia joined this in July 2010. So basically what happens now is when you buy that tube of toothpaste for $1, you still pay the P.S.T and you still pay the G.S.T, but it is one tax called H.S.T. So you pay the same amount. You still pay 5% G.S.T and you still pay 8% P.S.T, but instead you pay them combined into one tax called H.S.T of 13%. Okay. Now, G.S.T and H.S.T is managed by the Canada Revenue, not Canada Border Services Agency. I know we collect HST, but we're only collecting, CBSA is only collecting GST, and they turn it over to the government. Now here's the important point I want you to remember here at the bottom. On commercial shipments, commercial importations, oops, go back here, CBSA collects 5% GST, okay? The HST is not applied on commercial importations. So when you import something into Canada, the importer only pays the GST. They do not pay the PST. The GST is a federal tax, meaning it is given to the Canadian government. The 8% is a provincial tax that's given to the provincial government. So when you buy that tube of toothpaste here in Toronto, you pay $1 for the tube of toothpaste, but your bill says $1.13. 5 cents of that tax goes to Ottawa, GST, and 8 cents of that tax goes to Toronto, to the provincial government. Now the great thing about what we do here in this class or in this course, in this program, we only do commercial importations. So in commercial importations, we do not assess 13% HST, we only assess 5% GST, because importation is governed by the federal government. So we only collect 5%. But the mechanisms for HST, comprised of GST and PST, is exactly the same as GST. Okay, so we'll show you the mechanism. What we're doing in this particular lesson is the mechanism, not so much the collection. So when goods are imported into Canada, the GST portion of the HST is collected, 5%. When the goods are sold within Canada, HST 13% is applied. Therefore, only GST is collected on a Canada Customs Coding Form B3, unless the goods are zero rated. We'll talk about zero rated in a second. Now, you import, you're Walmart, and you import a tube of toothpaste, and the price you paid was $1 Canadian for that tube of toothpaste. When we clear it through customs, we apply 5 cents GST, which is 5% of $1, which is 5 cents. So Walmart pays 5 cents GST on importation. Walmart turns around and sells you that tube of toothpaste for $1. They have to charge you $1.13 because they have to charge you 13% HST, which is 5% GST and 8% PST. So what we're trying to show you here is, even though you and I pay HST 13% when we buy something, when that company imports it, they really only pay 5% because they only have to pay the GST, the federal portion of HST. So HST is comprised of PST and GST. When we import, we don't pay HST, we only pay GST, 5%. So therefore, only GST is collected on a Canada Customs Coding Form B3 unless the goods are zero rated. Now, most goods and services supplied in or imported in Canada are taxable at 5%. When they're sold in Canada, they're taxed at 13%. Now, zero rated. When goods are zero rated, the goods and services tax is 0. So when we import goods that are zero rated, we don't pay 5% GST, we only pay 0. And zero rated goods are listed in Schedule 6 of the Excise Tax Act. So let's give you some examples when we import goods. On the B3, when we import goods that are zero rated, okay, we don't put 5% into field 35 of the B3. we put in an exemption code depending upon what reason that company does not have to pay the GST. Okay, now we'll be doing some of these in a little while, so it's not to worry if you don't really understand that, but just understand we don't put 0 in the GST amount in field 35, we put the exemption codes. Some examples of exemption codes. If you're a sports team and you win a trophy outside of Canada, you're coming back in with that trophy, you don't have to pay GST on the value of the trophy. We put exemption code 52 in field 35 of the B3. The most common one you will see is number 59, food, groceries. So when Loblaws imports a shipment of lettuce from the United States, on the GST field 35, they do not put 5 or 0, they put 59 because groceries are exempt GST, and we put the exemption code 59 in that particular field. You'll notice when you go to the grocery store and you buy groceries, you do not have to pay GST or H.S.T because groceries are 0 rated. So when that grocery store imports that food, they don't have to pay GST as well. On the B3, we put exemption code 59. The one underneath it here, exemption code 66, prescribed goods imported under prescribed circumstances. We'll be using that one next week, and we'll talk about that. We'll be importing some goods that don't require GST to be paid, and we have to put this exemption code in. We'll talk about what those prescribed goods are and what those prescribed circumstances are next week. Now, companies have to do a tax return every month. Smaller companies every year, but most companies every month, called an input tax credit, where they add up all the GST and H.S.T that they have paid out this month on their purchases and importations, and they add up all the GST and all the H.S.T they have collected through their sales this month. They then pay themselves back the GST and H.S.T they have paid out and send the government the difference. Okay, so basically every company in Canada at the end of the month nets out to 0 H.S.T or 0 GST. They don't have to pay anything. And what I'm going to do in the next slide is I'm going to show you how this input tax credit works. So the thing to remember is that this tax, this value added tax called H.S.T, which is comprised of GST and P.S.T, is in effect borne by us, the final consumer. We have to pay the full 13% when we buy something, but companies end up paying nothing. Okay, and that is the crux of the matter. The most important thing to remember is that importers and then every company along the line of a good transferring from the importer to the wholesaler to the retailer, all those companies don't pay the H.S.T, but they get it refunded. When you and I pay H.S.T when the retailer sells us the good, we do not get it refunded. Okay. Now, some individuals, low incomes, can receive a GST/H.S.T rebate on your income tax, but that is not what we're talking about here. What we're talking about is how this system works. So to review, harmonized sales tax, which is H.S.T, is 13%. Goods and services tax, which is G.S.T, is 5%. Provincial sales tax, which is P.S.T, is 8%. And just to review, H.S.T equals G.S.T plus S.T. Okay, 13% equals 5% plus 8%. Okay? When you and I buy something, we pay H.S.T. When an importer imports something, they only pay 5% G.S.T. But the mechanism I'm going to speak of in a second, is still the same. Okay, so here we have a situation. And all these transactions I'm going to speak of occur in the same month. Okay, in 1 month, let's say the month of January. In this column, we have all these different companies. We have an ore wholesaler in the United States, we have a steel manufacturer in Canada, a washing machine manufacturer in Canada, a retailer, and a consumer. These guys are you and me. This column is the product that they are making, selling, importing. Okay? And this is the H.S.T. or G.S.T. the company pays and collects in this month of January. And this column is this input tax credit that they do at the end of the month to tell the Canadian government how much H.S.T. they've paid out and G.S.T. they've paid out and how much H.S.T. they've collected when they sell something. So let's take the first example. We have an ore wholesaler in the United States, and their product is iron ore. They have 100 tons of it at $1 a ton. They have sold it to this steel manufacturer who imports it into Canada. So when they import the goods, import this $100 worth of iron ore, they pay 5% GST of the B3. We do a B3 for them, and the steel manufacturer imports this $100 worth of iron ore. They pay $5 GST when they import that steel. Okay? Next step. The steel manufacturer takes that iron ore and makes a roll of steel and sells that roll of steel to the a washing machine manufacturer, and they sell it to them for $300. Okay? So on that sale, they have to charge the washing machine manufacturer $300 for the steel and 13% H.S.T. on the sale. So they collect $39 H.S.T., 13% of $300. Okay? Now, at the end of the month, they do their input tax credit. The steel manufacturer does their input tax credit. The iron ore manufacturer is in the United States. They don't do anything. The steel manufacturer paid out $5 GST on the importation, and they collected $39 HST on the sale of the steel to the washing machine manufacturer. So they pay themselves back the $5 GST they paid out and send the government the difference, a check for $34. 39 minus 5. They pay the government $34, and the government gets $34. The steel manufacturer at the end of the month has paid nothing. They paid $5 GST, but they got it refunded to them. So in essence, they didn't pay a cent. Now the washing machine manufacturer takes that steel and makes a washing machine out of it and sells the washing machine for $500 to a retailer. They collect 13% HST on the $500 sale price of $65. So they collect $65 HST. Now, at the end of the month, the washing machine manufacturer does their input tax credit. And they tell the government, I paid out $39 HST when I bought the steel, and I collected $65 HST when I sold the washing machine. They pay themselves back the $39 HST and send the government the difference, 65 minus 39, which is $26. At the end of the month, the washing machine manufacturer hasn't paid any HST. They net to zero because they got the $39 refunded. The retailer sells the washing machine just for $700 to the consumer. And on that sale of $700, they have to charge the consumer 13% HST, which is $91. At the end of the month, the retailer does their input tax credit. They pay them, they tell the government, hey, I paid out $65 when I bought the washing machine, and I collected $91 when I sold it. They pay themselves back the $65 and send the government the difference. 91 minus 65 is $26. At the end of the month, the retailer hasn't paid any HST. They had it refunded to them. They net zero. Now the consumer has purchased the washing machine and paid $91. They're not eligible for an input tax credit. They pay the $91. They're out the $91. Sucks to be us. The interesting fact here is these companies here net zero. The steel manufacturer, the washing machine manufacturer, and the retailer, at the end of the month, they may send the government the difference, but they've paid themselves back what they paid out. 39 minus 5 is 34. 65 minus 39 is 26. And 91 minus 65 is 26. Now, what I want to bring your attention is the fact that this is a value added tax, VAT. As a matter of fact, in some countries, they don't even rename it. They call it VAT, such as in the United Kingdom, they call it VAT, value added tax. So I want you to take a look at the washing machine manufacturer. Now, the washing machine manufacturer purchased the steel for $300, made a washing machine out of it, and sold it to the retailer for $500. The value added is $200. So they purchased the steel for $300 and they sold it for $500. Whoops, that's not what I wanted to do. They purchased the steel for $300 and they sold it for $500. So the value added was $200. Now, if you notice here, they paid $26 HST to the government. They paid themselves back $39 on the $300 purchase and then gave the government the difference out of the $65 they collected on the sale. This is a 13% HST, 13% value added tax. If I multiply that 200 value added times 13%, I get $26. Let's take a look at the next one. Let me just clear this. The next one, the washing machine manufacturer sold the washing machine to the retailer for $500. The value added on the washing machine is $200. They purchased it, they purchased it for $700, but it cost the retailer, the wholesaler, $500. The value added was $200, which is the difference between the $500 they purchased it for and the $700 they sold it for. 13% of $200 is $26. The government gets 13% on the value added of each transaction, not the entire tax laid. For instance, the washing machine manufacturer received $65 from the retailer. They didn't send $65 to the government. They paid themselves back the $39 they paid out on the purchase of the steel to make the washing machine, and only sent the government the difference on the value added, which is $200. 13% of $2 is $26. That's why it's called a value added tax. So the thing you need to come to terms here with this particular scenario and this particular topic is importers, manufacturers, retailers, wholesalers, any company at the end of the month doesn't pay any H.S.T. or any G.S.T. They get it refunded to them. Now let me just give you another little, let's say the retailer here, okay, let's say the retailer doesn't make the sale to the consumer. So let's say they don't make the sales to the consumer because they didn't have any sales this month. Okay, so the sale's not there. So what they did is they purchased a washing machine for $500 from the washing machine manufacturer, and they didn't have any sales this month. What they do to the input tax credit? Well, at the end of the month they say, okay, well, I collected 0 H.S.T. because I didn't have any sales, and I paid out $65 H.S.T. Guess what? This now turns to black because they are refunded $65 because they collected no H.S.T., but they paid out $65 H.S.T. So the government sends them a check for $65 because at the end of the month they have to be net 0. This is how it works. The government is dependent on these companies adding value along the economic chain. The only people who don't get a refund is the consumer. You and me. Okay, we're not eligible for input tax credit, but a company gets their money back. They add up all the H.S.T. and G.S.T. they paid out on imports and sales, and they add up all the H.S.T. they collected through their own sales. Let me rephrase that. They add up all the H.S.T. and G.S.T. they paid out on imports and purchases, and they add up all the H.S.T. they collected on sales, and they send the government the difference. They pay themselves back the H.S.T. or G.S.T. they paid out, and they send the government the difference. If they have less sales than they do purchases, they receive a refund of the H.S.T. and G.S.T. they paid out that month. This is how it works. So when you're talking to an importer, know that when you tell them, hey, you have to pay $400,000 G.S.T. on this particular importation, the company is going to get it refunded at the end of the month. They always net 0. Always net 0.